What's going on, everyone? In this video, I want to do a little bit of training and education, kind of showing you guys, how you guys can start to bounce stocks, especially when we start trending one way, whether that's short, whether that's long, and then the market kind of goes sideways for a little bit. And then, kind of knowing, when should you be looking to bounce stock or futures or whatever. So for this case, we're going to be talking about futures traders. We're going to be talking about the NQ. That's exactly what we're looking at here. Now, here's what I want to kind of identify right off of right off the open. If we look at this initial candle here, this 5 a.m., 6 a.m. candle, we know we had some numbers this morning. We know we've got some news going on here. So we had a very, very aggressive kind of washout. Now, when you're trading futures, it's a little bit different than kind of waiting for the stock market to open that New York session at 6:30. You can kind of start to see moves pan out in the futures market at around 5, 6 a.m. Pacific Standard Time. So about an hour to an hour and a half before the New York session opens is generally speaking when you're going to start to get those moves. So if you look at what happened here in the morning at 5 a.m., you can see a lot of consolidation here coming off that London session, coming into this pre-market, into New York open here. Just a lot of sticky action, up, down, up, down, up, down, up, down, in a very, very tight range. You can see the Bollinger Band kind of just hugging below it, acting as support. So one thing that you could be looking at here, if you are a futures trader, is looking for these tight periods of consolidation and looking for breakdowns or breakouts. So what I would be looking at here in this particular scenario, I'm going to use this low wick here as our breakdown spot 1, this low wick here as our breakdown spot twice. I'm going to look at this tight price action. I'm going to analyze this. I'm going to draw a box here and I'm going to tell myself, if we do break down below this price, I need to be going short and taking profits into the next area of demand. It's as simple as that. So many times people are wondering about the news, you're wondering about the numbers, you're wondering about the job numbers, you're wondering about interest rates, FOMC, what did Jay Powell say, what's going on in the overall markets. Forget about that, guys. Forget about all of that stuff. Now, do those scenarios move the markets? 100%. But if you're constantly looking for outside kind of biasness, right, outside intuition as to where you're gathering your information from, oh well, you're kind of looking at this, you're looking at that, it tends to get very, very frustrating and confusing. Okay, if you just simply focus on the price action, you simply focus on supply and demand, you're going to see the moves happen. So for example, if the market doesn't like the jobs number, I don't care if you think that the jobs number is good, it doesn't matter. What did the market do to react to that number? If they are selling it off, then jump ship and sell with them, as long as you've got room to kind of play. So if you look at this situation here, if this is our low, and we've got our zone here, right? If we do start to crack below that, we have to start identifying where is some areas that we can make money. If we do take a short below 15,263, what's our next support area? Our next support area is going to be this 150-day simple moving average, and that's sitting at a price of 15,241. So you have to analyze as a trader, is there enough room between 15,264 all the way down to 15,240? Is there enough room there? In my particular way that I trade, 25 points is more than enough room for me to take that scalp position. What I'm going to do is look for the confirmation flush there, and I'm going to be selling into demand. Okay, selling into demand. So I'm going to get to how we bounce in a second. I just want to show you how you play this off the open. As we break through this level of demand and we start to close below it on a 5-minute time frame, you have to look at the next area of demand. So the next area of demand was 15,224. You have again another 15-20 points worth of room there. Is this trade worth it? If it's worth it for you, go ahead and take the short position, use a stop loss over this 15,242 area. Again, we're going to play from demand to demand, supply to supply. And if we get in long and we don't never get to that supply and we come back down and break a previous level of demand, that's our stop loss. So again, as you can see here, 5 a.m., we put in a nice low. 6 a.m., we take out this low, have some more continuation follow through. 7 a.m., we take out this low, have some more continuation follow through. And then I want you guys to start focusing on this candle here. So look at this candle here, never takes out the previous low, creates a nice baseline. So now with this, you can start thinking, we had one pullback candle, two pullback candle, three pullback candle. Now we have no follow through. This is where maybe potentially I can look for a bounce. And how you're going to play this is you're going to draw a stop loss line here, okay? So if we take out the previous hour's low price, that's our stop. We're going to go ahead and get long off this recovery bounce here, and we're going to ride this up as long as we are above our stop loss. As you can see now, we're on the second 2.5 hours worth of a bounce here. Looks like we have room to go to 15,243. Again, if we never make it up to 243, then what we would be looking for here is a rejection and then come back down. You would have a short position here, back down to the next area of demand. Again, I know this starts to get complicated. I know this seems like a lot of moving parts, but once you start to implement it, once you start to practice it, once you start to actually take the trades, you get comfortable and you start to see these moves happen in real time very, very quickly. So again, if we were to go over here now to the 5-minute time frame, because I want to show you guys something very, very quickly. If we come over to the 5-minute time frame, and let me blow this up so everyone can see it. So look at how we came down here and we had this low. Look at the second low that we put in. All you're looking at here is this low. You're looking at the low wick of this whole formation. You're telling yourself this, okay? Self, if we break this price, I need to get out. I'm going to try my attempt on a bounce play when green takes out red. So if we look at this second decline here, and then we look at this green candle, green candle, green candle, starts to take out previous red. You would be entering into this bounce play at around 8:25 Pacific Standard Time. You're going to be entering in at around a price of 15,134. You're going to be using an exit at around 15,111. Again, if that's too much risk for you, let's say you're working a prop account where you only have a limited amount of drawdown and you're trying to trade 5-10 mini contracts. Guys, trade some micros, trade 4 or 5 micros, trade 3 micros, trade 1 mini, okay? Give yourself that 10 points of risk, 15 points of risk. Allow it to move, especially if you're going to play the beast like the NASDAQ. You guys got to be able to understand that this thing is going to flop around 10 points at the blink of an eye. So with that being said, 15,111 is our absolute stop loss. Our entry price is going to be somewhere here between 825 and 830, this reclaim with this 20 period moving average, or this bounce here when green takes out red. We have our clear stop loss. We're in this trade, and as soon as we break this 20 SMA supply here, what are we looking to do, guys? Stocks are going to trade from supply to supply, demand to demand. If they never reach a level of supply and they break demand, we're out. If they never reach a level of demand and break supply, we are out. So as we start to take out this 20 SMA here, that price is 15,154. We would be looking to take profits into this 50 SMA here, which is sitting at a price of around 15,175. Guys, that's 20 points. You take 4 or 5 micros, you're up $200, $300, $400. You take 1 mini, 2 minis, you're up hundreds of dollars in a matter of 5, 10, 15, 20 minutes. And you can hold those runners as long as we are holding our days low here. As long as we're holding our days low, you can just continue to inch this stop loss up as you take profits, and inch it up as you take profits, and then eventually you will get stopped out. But by that time, it's going to be a hell of a trade. So again, if this seems confusing, come over to Evolution Traders, sign up, become a lifetime member, get access to my 2 video courses, get access to one-on-one mentorship. I'll sit down with you for an hour a week and we will go over these scenarios in real time. We can talk about your struggles. We can talk about what's holding you back. We can get focused and in line with your account size. Whether you want to be a funded trader and trade futures, whether you want to trade stocks or options, I can help you with that. Make sure to join the Discord, link down in the description box below. And also, please, this is free. All you have to do is hit the like, comment, and subscribe buttons. Do those things for me. Help push this video out to more traders. Again, I cannot thank you guys enough. Make sure you guys are tapping that like button. I want this video to get out to as many futures traders as possible. I'm doing my best over here to educate and kind of teach you guys the ways of how to trade, how I do it at Evolution Traders. I'll see you guys on the inside.